of the program. So we have conducted a long program. So you have learned many strategies. Many of you have started forming the strategies in the testing the strategies in different ways. As I said to you, you can implement calendar spread in 8 different ways. As I said to you, you can implement box spread in different ways. Same way you can form strategies. All strategies you can implement in different ways. So that it is not necessary that only the adding a call component and put component makes a strategy market neutral. So if you are long call in something and short call in other things, that also makes it market neutral. So here, so various concepts you have learned, various ways we can able to neutralize the things you have learned. So question comes here, how I should implement all these things. There are, whenever you are forming the strategies, simultaneously 3 to 4 strategies you will be carrying. 3 to 4 strategies different. If your portfolio size is big, whatever big or small will be, 3 to 4 strategies will be followed. So you can say one calendar will be there, one box will be there, one jet score position will be there, one bull spread, bear spread will be there. Like this way, 3 to 4 strategies you can follow, irrespective of the bigger size of the portfolio. However, if you make it more than 10 or more than 15 different strategies, it will lead to confusion, and many strikes will have neutralizing effect. Somewhere you want to buy something, but other strategy recommending to sell something. So that kind of things will come. So that will neutralize many things. It will lead to confusion. You cannot make any money out of that. So 3 to 4 strategies I told you. Similarly, once you are forming the strategies, definitely one strategy should be there which will be taking care of the range bound market. Out of 4, one strategy should be planned and implemented in such a way that it should take care of your range bound market. That is compulsory every time. Then other 3 strategies, whatever you will be taking, jet score, based on the jet score opportunity you will be taking. Other 2 strategies, whatever left out, based on the VIX, once you get a trend breakout, based on that trend breakout, you will be initiating. So that is how 2 strategies will be there. So 2 strategies will be the major gainer or major contributor towards the profit, which will be initiated based on the trend action. So that what will happen, it doesn't require a market neutral view. Your money will be utilized to the maximum. So you will get a good profit. So this is how your portfolio should be planned. This is how you should plan your portfolio. So that is too many strategies if you implement, that will lead to more problem. Second aspect of this thing, this strategic trade, how much return it produce per year. Per year, how much you will get if you implement all these things, and if you can say, so you can say if volatility is bigger, then your returns will be fabulous in the strategies. Strategies can give you very high returns. Volatility goes to 25-30, strategies will mature very quickly. So now question comes, when it is in the 15 to 20 volatility range, what kind of strategies should dominate my portfolio? When it goes above 20, what kind of strategies will dominate my portfolio? So as I said to you, whenever 15 to 20% volatility is there or VIX is there, you should implement the strategies. At least one component will be there for the range bound market. You will be aggressively writing many options. So aggressive writing options or aggressive adjustment is required when your volatility or VIX is at 15 to 20%. Much below 15, your adjustments will be further more strong, because if it is below 20 weeks you are there, your adjustment will be really, it will make you to stand on your toes. So your adjustment will be very robust, you have to do, because there you know that the prices are not going to escalate in a bigger way. But when it comes to 20, little you can adjust lesser, but go along, walk with, along with the trend, VIX based trend. Whenever trend gives the breakout, enter. So that time you can filter out what are the strategies. You can say that bull bear call spread combinations will work. In weekly options also bull bear combinations will work out. There you can work out for your box spread with adjustment also will work out. So VIX is very important. So VIX is very important. Not annual volatility do not take. So VIX is very important. So VIX based system you have to follow. Less than 15 VIX you will be aggressively doing a pre-adjustment, and definitely one strategy should be there which will gain from the consolidation, because that is a market of consolidation. That consolidation can happen with a gradual uptrend or gradual downtrend. So price escalation will be delayed. If uptrend is happening, that uptrend will happen in a very slow pace of time. Downtrend is happening, that also will happen very slow pace of time. So as long as it maintains a very below VIX, the moment it goes to 15-20, it gives you little relaxation. That means the downtrend will penetrate or complete in a quicker time. Uptrend also will complete in a quicker time. Greater than 20 it goes, fabulous time for the option traders. You can able to make excellent money that time. Only thing is that you have to just watch the trend gives you breakout and you have to enter the trade. So that is how you should plan your trades and implement your trades. Now I am going to the best strategy, Christmas tree strategy. It is one of the best strategy I used to implement most of the time, you can say. But Christmas tree strategy, like yesterday I have told you, the weekly option spreads you are having, weekly option spreads, how much debit you have to keep, weekly option spreads, whatever the VIX will be there, 2 times of that you can take and make as a, that much of debit should be there in the weekly option strategy to make it profitable. So that is how it should be there. So just give me a couple of seconds. This is how you can say Christmas tree option strategy. Christmas tree option strategy is one of the best strategy. What we do here, so normally Christmas tree option strategy goes with a two higher strike bull spread or bear spread will be conducted along with one lower strike bull spread or bear spread. So that is how it works. When we say long Christmas tree option strategy, why it is maintained as a Christmas tree? So you can say that the structure of Christmas tree mostly in the triangular shape. You can say there will be a here, there will be a wide part will be there and bottom will be there. So like this way it is. So here you are giving a wide wing. So wide wing. So you can say that it is a wide wing butterfly is in one side, another side is something will be the lower wing. So this kind of things will be there. Christmas tree, long Christmas tree option strategy and short Christmas tree option strategy. So whenever we say long Christmas tree option strategy, so here this is a call option. So this is put I have typed. So it is call option. So call option, this is call. So long Christmas tree option strategy means you'll be having a ratio spread. So ratio spread, short ratio spread along with one credit call spread. So that is called your long Christmas tree, and short Christmas tree is ulta. So you will be having a ratio spread, 2/1 ratio spread, and you will be also having a debit call spread. So this kind of things. So this you can say it is not ratio spread. In fact, you can say it is a more type of, in upper strike you are either having a credit call spread or a debit call spread. So this you can anyway you can translate it into it, you can translate, but here 1, 3 and 2, this is the arrangement, 1, 3 and 2. So you just have a look why this Christmas tree strategy is important. First, it is distributing your theta. So distributing your theta. So lots are neutral. So distribution. So middle lots is only concentrated. So middle one either you buy or sell. This is concentrated. So whenever there is a lower strike, there is a upper strike, and middle strike is concentrated. That is called as a distributed theta and a distributed delta model. So delta also distributed, theta also distributed. So now these two things keep in mind. Delta distributed, theta distributed. So theta is distributed means how you should benefit from theta distributed strategy. If the trend is down, call side will give you profit. So downtrend give you profit in the call side. So that is what called theta distributed strategy. Delta distributed strategy, whenever there is a gradual up move happens, so that time this will give a profit. So this delta distributed means the middle strike which is having concentration will be in long, and theta distributed means the middle strike which is having concentration will be short. So this is the easiest way to remember a three-leg strategy. It's a three-leg strategy, but strategy is having these components. So now question comes, these depth of the strikes, here I have taken 400, 500, 600. So this depth of the strike also is very important to make this particular strategy profitable. So keep in mind, whenever whatever your depth VIX will be there, two times of this and multiplied with 100, you can say two times of this and multiply with a 10 or 100, whatever maybe, or that many hundreds will be your depth. It is just for remembering, that will make your distributions comfortable. So here whenever I say theta distributed, that means theta is slightly more than 5 but less than 9, because above theta 9 it makes unstable. When I say delta distributed, delta is above 30%, but it is not going beyond 45%. That is called delta distributed. So if the depth what you maintain, whatever VIX is there, if VIX is 30%, 30% you can say you should have, if VIX is 30%, there should be a 600 point depth you should give. 30 into 2 into 10. If VIX is 50%, there will be a huge gap you have to give. So here VIX is based on the VIX, the depth need to be decided. So that is very important. So I'll show you an example. So here, whatever example we have taken, so this part you can just have a look here. So you can have a look here. So call options, and certain call options we have bought here, and we sold certain call options. 200 point depth we have given, because VIX is around 10%, 10 to 11% it is there. So we have put that kind of VIX. So we can say I am going for a 19,300 call options buy, 19,300 call options buy here, and one lot, and I am selling, say this is call options, I'm selling 19,400, only 100 point I'm going. I'm selling here 3 lots, and I'm again giving one gap here, call options 19,500 call option. What I'm doing here, I'm buying how many lots? 2 lots. See, 100 point depth I have taken. Calculate the profit and loss. You can see that here everywhere we are getting the losses in the uptrend. Though price has moved off, it is we are getting a losses. So here what is, because we are uptrend, we are initiating a long Christmas tree strategy. Long or short is depend upon the lower strike. Only lower strike will define the long or short Christmas tree. If this is bought, it is long. If it is sold, it is short. See, this profit and loss, have a look very carefully here. Maximum it has gone to 2,000 rupees loss. Again further fund down. If I make this thing as a 200 point, say 300, 400, 500. Let the 300 to be there. 500 I will make it. I will be making it 700. So this is buy, this is sell, and this is buy. So if I make this thing, so you can just see couple of days you have entered to the profit here in between. So when there is a consolidation was happening, because this is made for consolidation, when the uptrend was there, so 6,800 rupees is the maximum loss it has triggered. Just to tell me when this strategy should be initiated to make it profitable. You have seen there is a 100-point depth. We made this kind of profit or loss, 2000 loss. When it is 200-point depth, we are making a bigger loss. So tell me how this strategy can be made profitable in downtrend. Downtrend, it will give a profit. Or if I just slightly make it, so 300, 500 I have taken. If I go for 700 here, so 400 point I am going here. So 700 point, so here sell, and I am 400 point I have taken, and 20,100 I am buying two lots. So I will look here. See, the entire viewpoint is changing. Just see, when we take 300 point, there was a smaller profit was there. Smaller 2-3 days we have entered to the profit. Margin is not changing. Margin is same margin it is utilized. But when I little expanded to 400 point, I have entering to a 6,000 rupees basket. However, when the Nifty has stopped, my losses also was more. So from here, you have to devise a model how to up move. It is giving you up move. It is giving you the losses. However, if the spread is increased, up move, though it is giving you losses, if the spread is increased, it is giving you the profit. So what should be the ideal spread? I should keep it so that I can make it profitable, more profitable. Say I have in a month, now you can say 6 or 700 point based on the weeks I am getting. I'll just change it slightly. I'll change this model. So I am getting 700 point based on the weeks. It will go. I am in the first day 19,300. So it is coming to 20,000. 700 if I add. So if I go to the terminal point, so 20,000 if I sell, and 20,100 instead of 20,100, if I go for 20,300 buy. So you can see here. So you can see here, buy, sell, and buy. See the amount of, it has only one day it has entered to the losses, remaining days it has entered to the profit, and 10,000 basket also it has come. Though market has made a new high, but still it is at a profit. 600 point it has given. So so this gives you a conclusion. Anything you can implement, either you can say short Christmas tree you can take after looking at a uptrend, or you can take the termination points. Termination point means instead of taking the 200 point, 300 point gap, so based on the weeks how much it is coming, you can take. Based on that you can make, but there is also a loss factor will be involved. So if this prices is falling, so you are here, you can say 262 rupees you are spending, but you are getting only 60 rupees, 200 point you are taking risk. So this risk perception will also add to your losses. So best time to initiate is, first you look into the weeks. Based on the weeks, if there is a uptrend breakout given, the day or the minute or the time you are finding out there is a uptrend breakout is given, from the strategy you can say, so from the strategies it should be sell, it should be buy. So whatever the weeks is there, time, number of times buy, and 19,700 here sell. So here you can see uptrend breakout given, I'll be taking the short, Christmas tree. Downtrend breakout given, I can go for long Christmas tree, or I can go for a short Christmas tree in put options. So short Christmas tree in the put options, so long Christmas tree in the call options, or short Christmas tree in the put options in case of a downtrend, and same process, short Christmas tree in the call option and the long Christmas tree in the put option in case of a uptrend breakout. So trend breakout is very important. Once trend breakout you get, you can initiate this strategy. So trend breakout is very important here. So if trend breakout is given, I have taken a position. Post I take the positions, couple of targets it will give and give a breakout, a comeback, or it will not give any benefit, or slightly means the immediately it will come down. So that also can happen. So trend breakout, anything you have to accept certain things, certain studies. Otherwise, how you will trade? Trend you will not accept. If I trend breakout given, I have taken the position, market is going to reverse. So same thing can also happen. Then what you will follow? So what you will follow? Then nothing is there in your hand to follow. That is the applicable risk in your study. So if it happens, you will have the losses. You will have the losses, and degree of losses will be also. The degree of losses also will be slightly manageable. VIX is giving you uptrend breakout. So VIX is giving you the uptrend breakout. So that time you should take this particular strategy. May not be, this strikes will not be that time. Strike may alter, may change. And best once it gives uptrend breakout. So definitely VIX best 700 point range is there. 200 point it has given you uptrend breakout. Another 500 point it will go up. Out of 500, if 200 300 point it goes up and falls down from there, that time itself you will be making some money it will be coming there. Even though it falls very rapidly, nothing you have to worry for this particular strategy. In this strategy, how much you have invested? 150 into 3, 450 rupees you have invested only. How much you have received? 260 rupees, 261 rupees already you have received. Another 150 rupees you have received here. 150 rupees, 74. So how much it is your maximum loss comes? 410 rupees is already received out of 450. 40 rupees risk if you do not take, then how you will make the money? This 40 rupees is your risk. So this 40 rupees is your risk. Then 40 rupees risk if you are taking, then it has a tendency to give you more than 10,000 rupees. So once it crosses 9,500, the 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 particular means that particular strategy is at a great profit. You can say that when Nifty has gone to here, 6,000 rupees it has given. So almost 120 rupees, 120 into 5 it's coming to 6,000. So 40 rupees risk you have taken, more than 120 rupees it has rewarded, and no point of time your losses whenever it was consolidating, it has never gone to 400 500 rupees. So this anyway you have to go with the trend will be your friend. Based on the trend you have to initiate. Trend gives you a trend breakout, initiate this. Trend gives you a downtrend breakout, similar things you can make it as in the put options. So book the profit based on the whatever the range you are achieving, 0.618, 0.786, wherever you are achieving. So you can say, if you look into this VIX based study, so we have 200 point up move, initiate it. Once it goes to 350 point to 450, this range, book the profit. 100 to 200 point, it will be a good profit it can come. So you can book the profit, this thing. But some trend you have to follow. Without following trend, you cannot initiate this. And what should be the ideal spread? Whatever is the VIX is there, whatever VIX is there, you can, whatever VIX is there, volatility based, whatever the VIX is here, 10 means 200 point depth will be suitable. 200 point just for that will make your delta stable, or delta distributed and theta distributed. So if it is VIX is 30, you can increase these things. Spread should be increased. Spread should be increased. So this process you need to follow. Any weekly options we can take this thing. So weekly options we can take this kind of strategies, and that too also in maximum 100 to 100. So 6th we are taking 3rd July. So I will not take the 3rd July. I will be taking 13th July. The first that week I will leave it off. So now call options. So preferably at the money call options I will be selling. So at the money call options I will be selling 19,300 call option. I have sold 150 rupees one lot I sold, and same time 100 to 150 point, not more than that. Call option 450. So 450 call options I am 19,450 call options I am buying. How many lots? 3 lots. And 150 point I have taken. Same process, call options I will be selling. So 600, 19,600, 19,600 call option I will be selling how many lots? 2 lots. So this is also weekly strategy, we can make it. So you can see here, after this thing, what happened? Consolidation happened. So here you can say we have sold, bought and sell. So here sell, buy, sell. 389, 331, 400 we have gone, not beyond that. So you can say 413. If it has penetrated, we would have got, because it is not for the uptrend. So it is, sorry, it is not for the downtrend and consolidation. It is required for the uptrend. So trend was consolidating. So there we have landed in losses, and based on the whatever we have received, we have based on that we have got it. So here also some people used to tell me, some of our traders, yes, used to tell me they are initiating Christmas tree strategy in 50 and 100 spread, means 13th. So here what they will do, 300 they'll go for 350. 350 they will be buying 2 lots, and 100 they will make it here. So 450 they will make it here to sell 2 lots. By this process they used to make, and they used to make a good money. 150 combinations, if there is a penetration of 150 point happened, 150 point happens, then they make a profit here. So that is, we can say 150 point roughly happened on 6 July 19497. So 760 rupees profit has come. So this also, some of our traders, those who are using our this, because this I have taken in earlier, some of the traders has already told me in weekly options they are initiating the Christmas tree, short Christmas tree in call option and put option with 50 and 100 gap. Means here it is 50, the lot what you are there selling, one lot, and lot what they are buying, there is a 50 point gap, and this will be having 100 point gap. So by this process they are making, and they are making good money. If it is penetrating, and if this particular trade would have closed above 19,450, then it would have given a good profit it could have been given. So this is also being told by a couple of traders. So that is what they experienced. So I have not tested it, because what they have experienced it, they have told me. So whatever they have experienced, they have told me. So that particular, based on that view, I have told you 50 and 100 also work out. What are the other alternatives one can do in this? Can you think and tell me? What are the other alternatives we can do? We are into a low volatility market. Call options also, it is having a 150 point premium. It maintains Nifty mostly. So call options are pretty costlier, it is happening. So you can say here, if that is a uptrend give a confirmations, so current month and next month is having a 150 points to 200 point premium it maintains Nifty future. So obviously the August month, September call options will be overpriced because of that 150 points of premium or so. So you can say you can create more depth here. So this is an alternative. It is nothing goes with. So you can create a more depth here. Instead of 200 points depth, you can create say 20,100. 20,100, but sell August. In the July you can sell this August. That is also one alternative you can form. So sell in the month of July, in the month of August you can sell to 20,100. If you are getting that same 74 rupees or 75 rupees or 100 rupees, it is good, where the depth is more. So if there is a penetration happens beyond this, it will be a great thing. So that also you can see. So here you have seen 19,300 to 19,900 we have gone. So 19,300 to 19,900 we have gone, and this part we have seen that we have gone to a profit of 6,800 maximum, in between some small losses. So here instead of July, if I change this and go to the call option here, but I will increase the depth. So here increase the depth. So here 20,000 also coming 121. So if I go for same 20,100 or 200 or 100 here, so I'll sell here. So what it gives? So what it gives? You can see here when the uptrend has happened and this which was giving me only 9,000, here I'm increasing it to 11,000. In fact, couple of places my losses also has increased because of that particular part. So when uptrend gives that kind of view, to enhance little profitability, you can think of that also. You can think of that also. Or what next you can do, instead of this July, you can have it, because this is a bigger value is there. August you can sell. So these are alternatives you can do. 19,300. So see 450 rupees you are getting, instead of what you should have formed in the. So you can sell this one, buy 3 lots here and maintain 19,700. Don't change both. If you change both and see what result is coming. So see, this is come to 20,000, but however these losses are there. So when uptrend, or you can say that this, if you can change it to July, it will be a different values you can get. So here instead of July, you can keep the middle strike in the current month. Other two ends you can change it to near month. So that also you can do. So that also you can do. So now that also you can do. So by this process also you can enhance the profitability to certain extent. Certain extent you can enhance the profitability. Where 6,000 was coming, same process, you can get 11,000, you can get 9,000. So these particular two legs, middle legs don't change. Middle leg is your buyer, you are buying that. So middle leg don't change. Only change the lower leg or the upper leg to the nearest month. Slightly increase the spread. So these are alternatives you can form. Alternatives you can form. So these alternatives is very important, because with these alternatives you can enhance the profitability. Margin will be same. Either you take July or you take August, margin will be same. What we are making here, say couple of months uptrend is there and we are not that much convinced that uptrend will be a big uptrend will continue. So in that case, we will keep everything as it is. The lower leg instead of July we will take in August. So what happens if there is a stiff fall happens? We have already taken some credits. You can say here 450 rupees we are spending, 450 we are getting, and this additional 150 rupees as a credit to us. So if there is a stiff fall happens, there is a credit to protect us. So there is 150 points of credit is there to take out from this. So these are the alternatives you can form, but be careful, middle strike don't change. You are buyer there, you are theta giver. Why middle strike should not be changed? Selling side, why I am telling to change? Because here you are a buyer, theta giver, you have given the theta. So furthermore, further if you change these things to the August and take July, then that you can say theta you are paying more, so you should not pay more theta. Theta should be whatever, wherever you are gaining more, that kind of places. So you can, yes, some part you will get in theta more decay, some part you will get. So because after the money you are selling, after the money you are selling means after the money will have the maximum theta. So that theta gain will be more. So theta gain will be more. And so here you can say uh, so Manish is saying using weekly top and bottom also this strategy give good result, and he is initiating this. So you can say Manish ji also is using this thing, using the theta. So what he is telling, weekly top and bottom, weekly top and bottom, these points finding out, he is in making it, and this gives good result in initiating, and he is initiating it regularly. And covered call strategy you can take, conversion strategy you can take. These are the strategies, very, very useful strategies. Conversion strategy, covered call strategy, these are the very useful strategy. So here also VIX plays a role. VIX plays a very big role here. Simply by closing your eyes, if you initiate covered call, zero, nothing will come. No technical backing behind it, it will give you pain. No benefit you will get. So what will be the process? VIX, again VIX. So VIX based price estimation need to be done. Based on this price estimation, once, because based on this 580 price estimation plus 220 point of move sets the uptrend and it can go 382 to 450 point up. Similar way, minus 221 points will set the downtrend and it can bring it to 350 to 450. So once it goes to plus 221 point, buy the future, and that time sell a call option, of nearest ATM strike. And if it is minus 228, sell the future and sell a put options at the money put option that time. So that is the simplest rule, and once it comes to 0.618 to 0.786, close it. If you want slightly more safety, so what you can do, buy the future, sell the call, and again you buy a weekly put options, preferably in the money put option. So here, if you sell a future, sell a put option, and here buy one weekly call option, preferably ITM call option. If you are going to hold it for 2-3 days, ITM call option. In case it is reversing, you will be having a minimum loss impact. So 0.68 to 0.786 means 221 point plus or minus you are initiating, 358 to 450 point of move plus or minus you are quitting the trade, coming out of the trade. So this is also a technique you can follow, covered call technique. So these all things, whatever I am telling, little bit of your work, because do not think in options. Many have one very big wrong idea. What is wrong idea? Initiate, forget, money will come. How many of you think like that? Initiate a position, forget it, money will come. How many of you are thinking this is the idea of trading? If you think this is the idea of trading, option strategy is not your cup of tea. You need to leave option strategy. Option strategy required everyday work. Initiate, forget, money will come. It will never give you anything. Don't get disappointed. Option strategy required everyday work. So without work, market will never give you anything. Keep in mind, option will make option. If you are trading, yes, little comfort will be there. You will not be trading every day, but you will be observing every day. You'll be looking at trend every day. You'll be looking at VIX every day. You'll be looking at open interest every day. If you'll be looking at put call ratio every day, you'll be looking at put call parity ratio every day. So all these observations will go on. So that will lead to sometimes adjustment. Once you get a profit, you have to cap that profit so that profit should not slip out of your hand. So once the profit comes to your hand, your job of adjustment is to enhance the profit. Initially, when you initiate the position, your job is to protect your money. So you have to do some adjustment pre or post. Once that position is giving 25,000 profit, so what happens? Now I have to do a adjustment to protect this 25. Whatever that 25 has come, it should not go out of my hand. So for that, adjustment is there. How I'll do that adjustment? Sometimes that lots I will change. I will switch the lots from strikes, from one strike to other strike I will jump. So something I should do to protect these things. Or I can form a new credit call spread with that, the credit put spread along with that. So what happens? My 25 should be protected. I should take out that profit or cap that profit there. So that is how you should trade. Say, for example, Say for example, we are coming, we have seen this particular things call option, and it is, we are giving this thing. So here we have come to a profit of 8,230. so we have sold August, bought this one, bought this one. Now 9,900. So completely we have penetrated 19,900, 19,700. Above we have gone 200 points. Say this profit has come, or 19,700 has come here. It has come here. So 3,000 rupees profit is there. I don't want to miss this 3,000 rupees. I want to cap it. How I should do it? I want to cap it here. 3,700 call, 3,700 profit has come. So what I should do? So I want to cap it. If I know that, okay, 3,300 it has come. If it is going to 3,000, another 200 point or 300 point up, my profit is going to double. No doubt about that. But this 3,000 rupees also important. This should not go out of the pocket. So earlier all my reviews on different testing giving me, yes, here the profit is this much. If slightly it goes up by 100 to 150 point, my profit is going to double. 3,000 is going to become 7,000. So this is going to happen if it slightly goes up. And VIX also suggesting that, okay, it can go. So what I should do here? I will be selling, say, 19,900 call option one lot. 19,900 call option. I will be selling one lot when? On 17th July. And preferably it will be July or August. Then I will be, say, 20,200 call option. I will be buying one lot. 200 call option. I will be buying one lot. So on credit spread I should form. I should take out my credit should be 3,000 above. 3,400. So I should take it out. So it has moved up, say as per my anticipation, it has moved up, it has gone here. This is giving 8,000, but this will be taking 1,000 to 1,500 net basis, my profit doubled. But from here, if it is slips, what will happen? 3,000 I have earned, this credit spread is going to give me 3,000. So that 3,000 rupees I will get it back. So even though if it entered to loss, nothing has happened. Whatever I have, what I have earned, that is capped. So that should be the idea of the strategy. So that requires everyday work. Simply initiate, close, again take one, again close. That is not the proper way. Strategy, sometime adjustment can be done to optimize the profit. Profit should be optimized. Profit should be optimized. Say you have taken a box spread. Imagine you have taken a box spread from here, it has touched 20th July, it was here. So 20th July, 19,900. So these are the things why I am telling you must say 20th July. I'll be taking 20th July data. Nifty top, made a top. We are forming a call box spread or half call box spread. So it has a top. 20,000 is a very physiological level. So we are thinking that, okay, it has a top, it is going to fall from here or anything. So we formed a call option, say July 19,900 it has come. So I'll be selling 500 point if I go for, so 500, 19,500 call, say I am selling here. I am selling here July, and same times I am July call options I am buying. So 19,500, 20,000 I am buying. So buying one lot, so 386 rupees is my credit I am receiving. I have 114 rupees as the risk. So this is this simple thing I have taken. Sold a call, in the money call, bought a just out of money call. By this process I have received 486. Say market falls down means I am going to make money. So market has fallen down post that, it is I am making money. Now no doubt about that. Say I have made this strategy when market is at a top. So still, what is my risk here? 114 rupees risk. So I will be doing some adjustment. I will be selling some put option, this stuff. So something I will be doing to protect my 120 rupees risk, whatever is there. 386, 380, you can say 314 rupees risk. I can manage it with well. But what happens, say here it has fallen, and you can say in this point I am getting 9,000 rupees profit. This is a point, 25th. The 26th is a expiry, it is happening. So 9,000 rupees profit is coming, and I have said remaining another 10 days are there till expiry. So I know this process, what I have found, 19,500 call and 20,000 call, it is almost 400 points. 400 into 50 is having a profit potentiality of 20,000. Out of this 20,000, I have just covered 9,300. So I have another 10,000 rupees to make. Say on 25th of July, if it is happening in this order, 9,000 only has come, 11,000 more can come if the market can fall further. But this 9,000, I don't want it should go out of my pocket. So what I should do here? So here, this is a call I have done. So I can go for a put spread, because if it is falling further, I am going to make money, because only once it is reversing going up, then my profit will go out of my hand. So I will be forming a credit put spread, preferably 19,500 put I will sell, and I will buy some more put. So you can say that once it falling below 19,500, I will be at optimum profit. I can book the profit, and put spread will be taking some money. However, that proceeds for 19,000 credit put spread must give me 9,000 rupees. That is how I can cap the profit. Otherwise, not. So this are the processes you have to go. Without entering repeated trades, same trades can give you more profit. So whichever profitable in your company, what you used to do? Anybody who performs good, performer, non-performer. If any staff is performing more, you are giving a hike, you are giving a good responsibility to him. So that is what you are doing in your company. So here one strategy is performing, already given 50% profit, another 50% is yet to come. Try to kick that strategy out. In your company, if somebody is performing good, giving you good business, and is a good asset for your company, you are giving a hike, you are protecting him, you are taking all care of him, so that that employee can give more productivity to you. You are not kicking him out, you are not telling that no, you are performing, you give your paper and go, get lost. You are not telling that. Performers you are taking care, but in the strategy part, you know that 10,000 it has given, another 10 also can come. So if you protect that 10, so your interest is protected, but it can yield to more. So 25% of trades in a year, if you optimize the profit, that is equivalent to 50% of new trade. The way I told you, if you cap the profit and protect your performing trade, and out of 100%, if it is only 25% worked, 25% worked, 75% did not work, that is equivalent to 50% of new trade what you can take and close. So this is also is a thing. So it is a very serious business. You need to work out very strongly for that. Strategy best suitable for expiry date. So this is the day you should study open interest. This is the day. So expiry date -1. 17th is the expiry. 16th of August. You have to by 3 o'clock. You have to see which of the strike is having highest open interest in call and put. Both the strikes you sell, whatever the net premium you are getting, say 30 rupees, 50 rupees, whatever comes, 30 rupees if it is comes also, you sell it, and net premium, whichever the strike you are selling call, in call you add this net premium, NP I am mentioning as net premium, and buy that strike, and put you should subtract that and NP and buy that strike. So this is for expiry day. When to go close it also, it is very important. Any expiry day, you will see that last 1 hour, any expiry day, so far any expiry day you can take, last 1 to 1.5 hour, 3 o'clock means around 2 o'clock to 3:30, there will be a wild move will happen. majority of the expiry day goes with one majority, not majority, 50% of expiry day goes with an good positive closing or negative closing. So that part is also there. So if you are forming this kind of strategy, in the morning hour itself you close, morning hour before noon itself you close. So that will be the good choice for expiry day strategy. On expiry day, on the day of expiry, if the open interest, whatever the highest open interest built up in the before day, if that open interest is falling, then you can also take a call. One more very good strategy is there for expiry day. In any expiry day, very carefully listen to this. If any expiry day there is a plus or minus 100-point plus happened or 100-point minus happened around 2 o'clock to 2:30. If it is a 100-point plus happened, 100-point plus happened, form a bear put spread in 50-point gap. One in the money will be there, put one OTM at the money will be there. So if there is a 100-point plus happened and 1 hour time is left, form a bear put spread with one ITM in the money, ITM strikes sell, and one ITM strikes buy and ATM strikes sell. ATM strikes sell, preferably in the 50-point. ATM strikes sell and preferably in the 50-point gap, not more than that. So what happens if this last half an hour weightage average will be taken for settlement? So what will happen? This ATM will become dust. Whatever 10-12 rupees will be there, that will be dust. So ITM will gain by that things. So 10 to 15 point you can make it easily. If there is minus 100 point, so 1 hour left is there, more than 100-point move happens. 1 hour is there, mostly 2:30 to 3:30 it gives that kind of things. Form a bull call spread. Contra position you have to form. So what happens? Last half an hour will be taken as a weightage average for settlement. So this is, you are in the last leg of the trade. So that period 20 to 30 point of adjustment will happen in the price. Means if it is plus 100, it will settle at plus 90 or plus 85. If it is minus 100, it will go to minus 85 or minus 90. Plus 200, it will go to the plus 185 to 190. Minus 200, it will go to minus 185 to 190. So that process of 15-point of adjustment what is there, that you can convert it to profit, and very strictly ITM option should be bought, ATM option should be sold, and that to be in the last 1 hour. ATM option will be having some value that time, 10-12 rupees value will be there. So you will be just 50-point gap, you have to mention it, and your aim is to gain 10 to 15 points. If it happens, plus or minus 100-point happens. It doesn't happen, that the scope is not there. Scope is not there. So this also you have to one strategy for the expiry day. But once you do it in the last, don't close it also. But I will suggest you, once you 1 hour before you are doing it, if that adjustment is going to happen, and if it is in favorable say situation, 10-15 rupees is there, just leave as it is. Don't close. Closing this at 5 rupee 5 paisa, again you will pay the brokerage here, taxes there. So ATM is definitely going to become dust, zero. So that brokerage also you can save, tax also you can save. ITM anyway, it will get exercised, the money value will come to you next day. So that part also be careful. Don't close it. If it is 10-15 rupees points there, don't close it, but provided that particular day definitely plus 100 or minus 100 point will be there. Then only that 10 or 12 point of adjustment will be reflected in the last half an hour of price. Average price will be taken for the adjustment. Then only that 10-12 point things you will get. 10 plus 10 or minus 10. If it is only 50 points, so the adjustment will be happening only 5 rupees. In every 100 rupees, it happens 10 to 12 weightage average, last half an hour weightage average, with respect to the spot, it will have a elasticity of 10 to 15 point, 10 to 12 point or 15 point maximum. If it is more than 200, it is good, 20 point also can come. But if it is 50 point, 40 point, 60 point, less than 90, so what happens? 5 to 6 point only will be there. That may not recover your cost. So that is also one strategy. This you can do it in the expiry day. Understood? So on the day of expiry, at 2:30 time, if you are seeing there is a plus 100 point or minus 100 point is there, plus 100 point form the plus 100 point ITM put, ATM put. Minus 100 point go with the call. So that is how you have to last half an hour. ATM you are going to sell. At the money you are going to sell, and in the money you are going to buy. Between them keep 50 point gap for the Nifty. Not more than that, because you are going to gain some hardly 10 to 12 points. 2:30 only, not before that. 2:30 to 3 only, hardly half an hour time will be there. It is not -1, it is a different strategy, Sarah. Last half an hour time, 3:30 to 3:30, weightage average will be fixed. So weightage average will be fixed. Now 3 to 3:15 they made it. After 3:15 there is no weightage average. So you can say 3 to 3:15 weightage average will be fixed, and that weightage average, if there is a plus 100, it will bring down to plus 90 or 90, 95, lesser than, or 5 to 7 points lesser than. Minus also similarly will get adjusted towards up, not towards down. So that weightage average 5 to 7 point whatever is there, or 10 to 12 point of weightage average will be definitely will be there, because unit is 20,000. So that mathematical weightage average will be, that definitely will be there. Out of that, one part you can capture. 10 rupees to speedily it will fall down to 5 paisa. 5 rupees, 4 rupees, 3 rupees, that half an hour time. Then why to close it, leave as it is. ATM is sold, that is it will be become zero, and in the money what is there, it will get exercised and you will get the money value next day, because that also will having only in the money, only intrinsic value. It will not have any time value that time. ATM what you have sold, it will be settled at zero. You have not paid any brokerage, no taxes will be there. Zero, exercised by the exchange, zero. So no tax, no brokerage. So ITM will be exercised with the money value. So their brokerage and tax will come. Then why to close it and take a margin more? Because if you close it, this is selling side will having a full margin you have to pay. So both you can leave it. So what will happen? Next day you will get back, your margin will not increase. So around 4 o'clock it will be get settled. You can, second method you can try, but it is good method. So but provided whether you can able to take a bigger positions and all, that is depend upon how quick you are in executing the trades. There will be a fat finger issue also will be there. So that also will be there. Covered call, covered put, covered call positions, what I said, covered call, call position, what I said. First look into the VIX part. VIX plus 220 points, one up, buy future, sell a call, sell a ATM call, not ITM, sell a ATM call. ATM call you sell. If you want to hedge it, one OTM put you can buy, and weekly put you can buy and hedge it. If you minus 220 point, sell future and sell a put, and one OTM call also you can buy to reduce the margin. So once it goes to plus 358 or 455, close the trade, or minus 222, minus 358, minus 455, you can close the trade. And this process you can take bigger positions also. Range breakout happened means this 150 point is a big money, it is not a small money. So you can add. And one part of people comes, okay, it is not a very big money. If the same training is conducted in 1 lakh, They will be seriously watching. They will be seriously practicing. Seriously, they will be doing. So it is 900 rupees. So there is no seriousness. So always we think that cheaper commodity having lesser value. It is not the true. So cheaper commodity, one bottle of water, which is just 10 rupees in desert, it is highly pricier. The same water, Bisleri, which is costing you 10 rupees here, inside a desert, if you get it in 10 rupees and you are highly thirsty, so that time the 10 rupees is costing you like anything that can save your life. Though it is cheaper, it is that time. One diamond also, if it is given you 10 rupees and one water bottle given you 10 rupees, you will prefer to choose the water bottle. Yes, that is going to save your life. So if the same thing you can have in your trading, yes, these are the alternative strategies I have learned. I have to only test and implement. If you do that, your, as I said in the beginning day, this one program itself will change your entire life. This one program, you need not have to say anything. uh, so uh, that is so you can say it will entirely change your all these studies. Confidently I can say jet score will work, expiry day strategy will work, bull call spread will work, calendar will work, everything will work, provided these studies you should take it very seriously, very seriously. And 150 people joined, 50 people only, 50 people only joined the session from the day 1 to day average 50 people. So in this session another 30, so you can say 50% of people have joined this program from the first to last. So that is very important. And these 50% people, those who have joined, out of that 50% of people only practiced. So 25 people have reciprocally practiced it. They are serious. They are determined to make money in the market. They are determined to make money in the market. They are true to their knowledge. They are true to their essence. So they will definitely make money. There is no doubt about that. So other those who have come, they are either intraday traders or they are in a dream world. Some magic will happen, we will get some money. Magic will never happen. There is no shortcut. There is no magic. There is no secret techniques to make money. It is like other trades and profession, you have to work. Only what work here, work is very less. Fixed based calculation, fixed based calculation. Fixed based calculation you did? Yes. 600 point is the range? Yes. 221 point plus or minus uptrend or downtrend? Yes. 200 plus gone, I am forming a covered call. I will definitely get success. After touching 221 point, it will fall back by 220. Chances are remote. Even though it happens, little loss I have to accept. But once it happens 221, the probability of happening 358 point is more than 90%. I am again hedged. So without fear I should enter. Z score +2. Yes, that +2 cannot become -2 overnight. Maybe it is +2 will continue 10 days for as a +2. But I am hedged. Why should I worry? That is how you should go on. I have taken a box spread. Okay, market has gone against me. Nothing to worry. Next month I will pull the same strike, same spread. Continue for 10 months. Continue for 15 months. Continue for 2 years. One day it will correct. The day it will correct, that is my day. So that is the spirit of option strategy. That is the essence of option strategy. It should be mathematical. In market, all studies should be mathematical. It should be scalable. It should be scalable. It should be mathematical. It should have a logic behind that. Why we are doing this? Why we are doing this part? What way we are doing that? So that is very important. All of you are telling what? What is the percentage of success I will get? My software I am selling. Did I will tell you my software gives you 0% success? You know the answer. If you are asking the question, what is the percentage of success I will get in your software? I will tell my software will give you 100% success. I will not tell a number which is less than 100. That answer is known to you. Only thing is that it will give you happiness. That is also false happiness. I need that you should be a happy trader and it should be a real happy trader. When I say Z score, I am not telling you, I am showing you, not from 1 year day. I am telling from 2019 to till date. Corona came in between also. Whenever there is a +2, -2 also is a possibility. It has come. When there is a -2, +2 also is a possibility. It has also come. So keep testing on this. You will definitely work. So Manish is association with the smart finance from 2009. So he is telling this. So these are the essence of our study. We can become successful. Everybody can make money in the market. So it is not that it is an impossible game. It can, everybody can make money in the market, provided you should logically think and reciprocate. That is what is required. Logical thinking. Every strategy I told you, even though it is a 2 lots, even though it is a 1 lot, some buying or selling, whether the depth, everywhere I have utilized the term why it is, what for it is being taken, what makes me to think like this. That should be your bargain point. If you are buying a software, you should ask the developer what is the logic. If you are buying a course, you should say what method is being utilized. That should be your question. Your question should not be what is the percentage of success I will get. Ram Kumar ji is telling I am repeatedly attending these these programs to get the knowledge fully. So that is also like a professional. You have to so I am also learning. It is not that you are only learning. Once you ask me questions, I also work, I also learn. What is the point of learning? I learned 10 strategies, using it, making good money. There is no point for me to sit in the weekend and conduct the programs. Why I do that? I need that my brain also should get some feeding. You people who provides the feeding for that. I also learn a lot from you people. So your multiple questions, your it's a war. So if you practice more, you will become a perfect warrior. So now 50 people will ask me question, 50 people will interact with me. So what will happen? They will also gain what expertise I have. I will also gain what I do not have, because they will ask questions which I have not, maybe I do not know about that. So I have to work hard for that. So this process is a continuous process. Here nobody is a loser. Both are, you are gainer, I am also a gainer. So that should be there. And always I used to tell, do not buy any software or course if you do not understand that concept. If that concept is not understand to you and someone is telling it is a hidden concept, I will not tell you. Either he doesn't know the concept or there is no concept. There is nothing called hidden. It is, if he can calculate, you can calculate. So why it is hidden? Nothing is hidden. So if it is hidden concept, then there is no concept. I can say there is no concept. Nothing is called hidden. So if hidden treasure, it cannot be sold. It is priceless. If it is sold, it is not a hidden. So yes, it is there. You must ask what is the concept behind this, how you calculate this resistance, how you calculate this support, what is the process involved in this. All these things should be your questions from a trainer, from a software service provider, from anywhere. But what you are asking, what is the percentage of success? What is the ROI I will get? ROI you are going to get, why the hell he will be worried for that? Your ROI you are going to get, he is going to sell something. He will say, ROI sir, 1 lakh will become 5 lakhs within a month. You are very happy. It will give you a happy feeling to spend the money. It will give you a happy feeling to spend the money. So money, you should loosen your purse and money should fall there. That's all done. So that should not be the things. So whenever, that's why what happens in smart finance, we find it very difficult to push our product. Reason, we never tell this thing. If someone is telling ROI, I will tell it is your money, you are going to grow. I do not know what ROI you get. Someone will tell in the other way, can you tell every day how many points of gain I can get in intraday? I will say that nothing you will get. You are not fit for intraday. This is my answer used to happen. Many calls I used to get, they'll say, sir, if I am using your 1SD system, how many points in a day I will make profit? My answer to that, my boys are there, means they will say that, sir, we do not know. But I answer in a very sarcastic way. I used to tell, you are not fit for intraday trade, better quit it today, or else all your capital will be lost, you will be in the road. So this answer, once he gets, what a foolish fellow I talked, he'll say, I made a mistake by calling you. He will keep the hang the phone. But that is the truth. Truth he cannot digest, but that is the only truth. And same people also used to come to me after a year or 6 months. They used to tell, sir, that day I called you for 1SD software. You told me this thing. No one has told me so harshly to me. And that has happened with me after 1 year. Or same thing happened with me. It is not my course or it is not my forecast. He is wrong. It is his mistake that he has focused only on how many points he will make. Whether that points can be earned or not, he has not investigated that. He has not educated himself. He has not skilled himself. So those kind of traders should not be there in the market. Why to waste the money? Why to waste the time? If you cannot understand something, that is not your cup of tea. That is not your business at all. Do something different. If it is your cup of tea, you should invest full and full. Yes, Dineshji, you can take multiple times also covered call and covered puts as long as that provides you the opportunity. So here option strategy can be initiated only by the interest group of people which fit for that. They are fit for carrying that money. They are fit for utilizing that money. Have you ever seen the Naran Murthy has told, I bought a bungalow, 500 crores somewhere in some plot point in the Bombay? You have never heard. Have you ever heard that Sivnadar has told that I bought a bungalow worth of 1,000 crores in some street in some corner of the world? No. Whom you are hearing this? Who are the new age business? Those who are just bought up. So they'll say, I bought a bungalow worth 1,000 crores. Who cares about that? You are going to stay there. So what makes them to publish this knowledge things? They want their share value to be artificially grown. When any business says that the promoter bought a big bungalow, invested too much in a huge house he is staying, so Reliance case is different. That was publicized by the people. Okay, he has not told that. So, but here what happens? This kind of things once comes, artificially the share price will go up in the market. So that is also one kind of scam in the making. So which cannot be told by someone. So this is the things. Real business never publicize their personal ambitions or expenses. Maybe they will be having a huge house which may be costing thousands of crores, but they do not say because they have no need to expand that, show their individual interests. So that makes that he is buying a house of 1,000 crores. Whether his company is bankrupt, we will buy his share. It means he's inherently his company is doing good. It will give a feeling. It is not true. So we are the traders of this country has to be get educated first. Number of trades are more, returns are zero. Number of involvements are more, returns are zero, because we have not created a how to do, when to do, and what to do portfolio. How to do, when to do, and what to do, these three things we have not made. Profit and loss is a part of business. Doesn't mean that if you have all take due care you can take, you will not land in loss. You may land in loss, but you can again stand up. You can again stand up. It is possible. But if this three part, how to do, when to do, and where to do, that part is not there, you cannot stand up. Fine. So with this, I will be ending this session with this happy note. So I thought, also I become a career coach. So I have given you a lot of beyond subjects, many inspirational things. So let me see how it transformed to the success of you. So I'll be ending English session here. 11:30 we'll meet the Hindi session, and in this session also we will discuss the same subject and wind up the session. However, your support channel is on. If you still feel any problem in implementing any strategy, you can contact me without any hesitation. Your support channel is on. Your association with Smart Finance is on. So anytime you feel any strategy, any difficulty in implementing any strategy, any im- implementation issue in any strategy, following up any strategy, understanding any strategy, very well you can directly contact to me. There is no via media in between also required. I'll help you in that. There is no problem in reachability. You can reach to me at any point of time. Thank you very much. Thank you for your time. And I had a very wonderful time with you. Thank you very much.